What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
Thank you for joining us for this week's episode of The Last Trade, a podcast from Onramp Media. On today's show, we're joined by Mark Connors, Onramp's head of global MicroStrategy. The conversation covers various topics, including the aimlessness of the broader crypto space, MicroStrategy's Bitcoin strategy, the potential of AI, and the hype around Nvidia. The discussion highlights the tendency in the crypto space to create narratives as opposed to substance, and the importance of understanding the economic reality of Bitcoin. The conversation also touches on the challenges of AI adoption, the potential bubble in the stock market, and the need for caution and skepticism when evaluating companies like Nvidia. We also explore the massive debt problem in the United States, with interest expense on the federal debt surpassing national defense spending. The discussion touches on the challenges of traditional investing and the appeal of Bitcoin as an alternative asset class, as well as a solution to the broken monetary system. We also discuss Bitcoin's potential impact on the upcoming U.S. election and the positive economic effects of broader Bitcoin adoption. And now, time for the show.
And we're back. A little bit of a weird start today. We got Marty with some technical difficulties, so he's coming in, but we got Mark Connors here, officially head of global macro at Onramp. He was on the pod 2 weeks ago or last week with Mark. Oh, there we go. With Mark Valek from Incrementum. But it's official now, and he went out with a bang starting on the Schwab network with some very large price claims that we're excited to chat about today.
We could just redo with Marty now if we want
to. We don't have to.
We got 30 seconds in.
Your intro sounded great. I'm sorry. I'm on a remote island where the Wi-Fi isn't perfect down here, so I've been troubleshooting. Sorry for intro.
All good. No, it's all good. I'm happy to go either direction.
I think we just jump into it. Mark, I mean, I saw you on the Charles Schwab network. You and one other gentleman.
Yeah.
And you were forced to talk about Ethereum for a little bit, I think.
Yeah. So when I was at Credit Suisse, we did some media training, and we call that touch and go. You don't avoid it. You say, yes, Ethereum does exist. Back to Bitcoin. So,
we all need a little bit of that.
The BIS does love Ethereum. They're going to put all the system on it later on, and then there's Bitcoin. We can go back to that.
At Onramp, we believe that Bitcoin will be the most important asset to own in the 21st century. Our multi-institution custody solution is the safest and most secure way to ensure that your Bitcoin remains in your and your family's possession for decades to come. Multi-institution custody maximizes security and minimizes counterparty risk, leveraging Bitcoin's native properties to eliminate single points of failure that have historically complicated Bitcoin ownership. Onramp provides peace of mind for your Bitcoin journey. For more information, check us out at onrampbitcoin.com.
Yeah, Ethereum seems like a project that is a bit aimless right now, which is good. Did you guys see that thread? Maybe we can start with this. And sorry for completely bombarding this and coming in with my own thoughts, but did you see the thread of the gentleman? He's some crypto bro. He wrote like I think it was like a 30 tweet thread, basically explaining the big problem in crypto and why prices aren't pumping, which is the fact that everybody keeps releasing new coins and then unlocking supply of pre-existing coins. So the amount of supply coming on to the market is such that it's hard to drive up prices. And he was acting like there's an existential crisis that nobody understood before, but this is something that Bitcoins have been opining about for well over a decade.
A breakthrough insight there.
Marty, I did read that, and I was looking through for him to say, and folks, this is why we can't get out of our own way. Let's change it. He's like, no, I found the reason why. It's like, it's going to happen again, son. Yes.
Yeah. Follow my newsletter and I'll tell you the coins that are going to avoid this problem. It's essentially the solution he came up with.
Oh, that's right.
It's truly amazing, like with the amount of, clown world amount of liquidity gets pumped in a system, the nuttier the narrative gets. Like Marty, that tweet I sent you, and we can name the coins or we don't, but about the like two infighting with the crypto bros, where there were certain guys that are, the like 2020, 2021 camp, and now it's gotten crazy where you have meme coins. And so the guys go and like partner with like actresses and people, and then they launch these coins. And so then the people from 2021 have the fundamentals. So those are the ones with the right coins, but the meme coins are the ones that don't have the right fundamentals, and they're the like, biggest shit coiners in their world. And it's just this interesting like dynamic where they have understood that they're both basically have no fundamentals. There's no value tied to either one.
No, I mean, this is a tale as old as Bitcoin, which is all the altcoins come and say, we've got a better Bitcoin. We figured out, we solved all the problems, and they deride Bitcoin, call Bitcoiners stupid maxis, and that they're the MySpace, and our coin solved it. And then one cycle later, there's a coin that comes out and it's like, no, we actually solved this coin's problems. And then they find themselves in positions that Bitcoiners have been in perennially for 15 years now, which is like, no, like people, if they have access to the button that's going to create more supply, create a new flashy altcoin, they're going to hit the button and they're going to drive narrative around it, and people are going to jump from your altcoin to the other. That's why if you're listening to this, it's not about the tech. I mean, the tech is an enabling force within this. It's about the monetary properties. All these altcoins, all these cryptocurrencies compete on monetary properties, and none of them can compete with Bitcoin's monetary properties.
Meme coins are fun. I mean, they, I hear, I think someone they trade, at least in May, they were trading 18 billion a day, more than the S&P, more than any kind of. So there's engagement. And so, have at it. But as you said about monetary properties, and, I call it being fit for purpose. Remember once when I got my boys out and my dad wanted to take us on the water. And I'd take a boat out once in a while in high school, but I'm like, I'm ready. Let's go. We go to the place. Guy behind the counter says, great. There are just 3 words you need to tell me before you take the boat out. So, it's like, be back early. He's like, nope, that's not it. And went through it. My dad shuffling his feet, kind of going, all right, Dad, what is it? He said, read, write, return.
Mm-hmm.
Keys came over the counter. And when it comes to tokens, and tokenomics and Bitcoin versus others, you have to look at 3 things: the degree of decentralization, degree of security, and degree of utility or scale. And once you put that down, the first 2 that have to be nailed down are decentralization and security. And if you don't enter the game, again, I was at a broader firm. We looked at a lot of different tokens, and that's, one reason why I came here is because I thought the alpha was in the beta. If you want to look at the market is Bitcoin. Everything else is obviously marginalized on the decentralization side, like what you were talking about, Marty, or if you brought up that the guy talking about, geez, all these unlocks, when do they come? How much are they? And it really does hurt price. It's like, yes. Why? Because there's a switch and someone can pull it.
Yeah.
We did take the boat out. I just wasn't behind the helm that day, just to close the loop there on that one.
Yeah, you can see there's people. You can't see it because of the glare on the window, but there's a babe right behind me, and there's people doing read, write, return right now.
That's it. Properly in a harbor.
I've never heard this phrase.
Yeah, if
East
you drive
Coast thing, huh?
you
The
have
boating
red,
culture thing.
you have red and green. I guess you call them buoys, and they sort of dictate where the traffic flows in the water in the back bays. We've got a lot to talk about. There's a lot going on in the incumbent financial world, but we'll ease into it with the intersection of the equities markets and Bitcoin, which is MicroStrategy. They announced, I believe, last week or the week before, that they were going to raise a $500 million convertible note. I believe it was a convertible note. And they announced this morning that was oversubscribed by 60%. They ultimately raised $800 million. And I don't think they've bought the Bitcoin yet, but they plan to use those proceeds to buy Bitcoin.
I believe
they did it this morning.
Yeah, 11,900 Bitcoin. So yeah, almost 12,000 Bitcoin, which gets them, if they were they already at 1% of the total supply? Okay, so
It's 1.07% now of the total supply.
1.07%. Wow.
That's
I wish my entire stack was just a fraction of what MicroStrategy's DCA stacks seem to be. One can
I can't
dream.
imagine. I can't imagine Sailor sleeps good at night with that much Bitcoin. Like at this current custody, because like it's just sitting on these exchanges, and he knows, like, you know, it's sitting on a bunch of exchanges, which is a problem.
Got it. Yeah, I didn't. Yeah, so you're looking through price, because I was like, I think he's okay with the price part. You're talking to finality. You're talking to custody.
Because you wake up one day and it's like, hey, we just lost a fourth of your stack. I'm sorry. Like that's a possibility. It's not a likely one, but it's just a hard pill to swallow that exists. I think everybody here probably has a different model that exists that can't happen to them, and you sleep a little bit better than that. And imagine holding a little over 1% of the supply and knowing that somebody can call you to do that. It's just anyway, it's just something I think about. Like with power comes responsibility, and there's a lot of responsibility there.
We're going right to the core of the topic today, aren't we? Right?
I was just thinking that was just the first thing
Always top of mind. Yeah, better custody is always top of mind, huh? I think about it's funny that I don't worry so much for MicroStrategy, but like we probably should. I think about like the OGs. There's that story of the guy who hacked the Silk Road. Guy went by the pseudonym Loaded. Yeah, and so he stole from Silk Road. So, you know, legal, moral, ethical gray area there to start with. But he had, what was it, Marty, like 50,000 Bitcoin that he got from that. And he put, for the last decade, he had stashed away in a popcorn tin buried in his basement in his home in Georgia. And then he made some sort of slip up that got the FBI on his tail. That was probably 3-4 years ago. And then they caught him and recovered this computer, this motherboard, I think, out of a popcorn tin buried in this guy's basement that had a few $1 billion of Bitcoin on it, just sitting on an exposed computer, piece of hardware.
Raspberry Pi. Yeah.
Okay, it was a Raspberry Pi, just a fragile piece of hardware. And that was how this guy had determined to store this insane amount of Bitcoin. And to me, that story is, first of all, a crazy, wild, absurd story in its own right. But it also sort of speaks to what are the other OGs doing? You know, what sort of practices did they adopt in 2011 that they've been too afraid to update in terms of how they're storing their Bitcoin? There's probably quite a few Raspberry Pis out there with 10,000 Bitcoin on them, or you know, similar sort of story of some dedicated computer just with an encrypted file sitting on it with 10,000 Bitcoin in it. And if I was in their shoes, I'd be extremely fearful of bit rot or a flood or, you know, a fire in my house. And I wonder how many people are in that position. It's not a, you know, a single digit number. It's probably 100 people who or more who have that sort of situation, and I would not sleep well in their shoes.
No, it's
I wonder if they take the idea of the Lindy effect, which worked well for their stack on the price front, and have applied it to their tech stack, which may not be the right.
Yeah, right.
I don't know what kind of morphine, but that probably doesn't translate well to technology, which moves a little bit faster on the deflationary front, right? You always get more for less. So yeah, I don't know the number, but you know, I see it in different ways with just comfort. People won't make changes. I mean, we got, you know, I play golf periodically, not a lot anymore, but I remember going out like every fifth round, you'll see a guy who still has his driver that's made of wood. He has a 3-wood that he calls a spoon because it's cute. He got it in high school or something, and he still likes it. Stays with it, even though he gives up, 30 to 50 yards. He doesn't care, just loves having it. So I think, that sentimentality or that familiarity costs you. And some people don't care until it's too late.
Yeah.
And they bounce around and have to pay money.
Mark, I feel bad. We're going into the markets and getting excited, and kind of like dovetailed it into Saylor and his custody setup. But I know you were ready to go. I'm curious your thoughts on Saylor and just the strategy and what's the play the next 18 months with other publicly traded firms.
So what he has been doing, people say, oh, he's just swapping fiat for Bitcoin. He's not. What he has done is it's not hacked, but he has figured out what Wall Street loves. Wall Street loves volatility and arbitrage. And what he's been able to do is to say, well, Bitcoin's volatile and let me monetize it. So let me take a step back. I was in the convert market in the early 90s and actually ran a cap structure ARB fund that used convertibles. And it worked very well because a company was courted by all the banks to say, hey, listen, you're a high vol company. Your credit spreads are like 12% and your volatility is 60. You're just your cost of capital is too big, but let me do something. Let me turn it on its head and let me sell a bond with equity embedded. You're not selling your equity today because no tech person, even in the 90s, wanted to sell their tech cheap. We're going to sell it 50% higher, maybe 60%. So we're going to sell a bond with a low coupon, give them some love on the income, and they're also getting a call on this very volatile stock. And that worked very well. Merrill Lynch made a load of money, and they even sold these things called liquid yield option notes, Lions. They made a name for it. Zero coupon convertibles, which had imputed interest over time. They didn't even pay out cash. It worked very well because companies could sell their stock higher. So my point is, this game's been played for decades. And what Saylor's doing is he's inserting not a tech company, but he's inserting Bitcoin into it, which we know has a higher vol, although decreasing. And Wall Street loves it, and it's a way to monetize it. And he also is able to put out his liabilities for 5 to 7 years on the term structure of the bond. It's absolutely brilliant. It'll keep coming. And as we saw with our friend Dylan LeClaire, there are more companies that are doing this type of transaction, and there will be more. I'll bet a couple sats that we'll see dozens of companies in the next 12 months with market caps, definitely north of $1 billion, and the order of probably a couple $100 billion doing this type of trade.
Wow. How big is the untapped reservoir for demand for this kind of product? I mean, how much capital can be deployed into this kind of strategy?
The convert market, would be one animal that would go into it, and if memory serves, it's a couple $100 billion, I believe. I'll have friends ping me on Bloomberg to tell me I'm off by not an order of magnitude, but a little bit. But I think that's about right. And then, the high yield market is, $1+ trillion. So it's a big market, Jesse. It's a big untapped market. And you also have equity people who will get involved as well. And we know that markets, U.S. equities are 47 trillion, let alone the derivative market is multiples more than that. So it's big. We're in earlier innings in this trade than we are in Bitcoin adoption by multiples. That's how big this opportunity is.
That's a good way to think about that. That it's sort of, we're in the early, it's an adoption curve for that strategy in the same way that adopting Bitcoin as a treasury asset is an adoption curve in its own right. And yeah, I still don't fully understand what MicroStrategy is doing, or how they're able to keep doing it, and why there's so much demand for what they're doing. that's the part that still kind of mystifies me.
Well, you have to,
and I think that speaks to how early we are in that trade.
I mean, he's able to do it because nobody else has really joined him in size like he has. And then, from what I understand, building on what you just said, Mark, there's a lot of pent up demand for yield out there, and these convertible notes have proven to provide good yield. I mean, they convert pretty quickly as the price of MicroStrategy reacts to more Bitcoin on the balance sheet and people just piling into the stock. It converts, and you've got a good yield on that trade. It's a proven trade over the last 2-3 years at least. So,
and you've got a growing depth of option markets on this growing market cap. So it is a flywheel. And what we think Bitcoin is, as far as expanding footprint of market value, think could be a beast. And it has grown. It has surprised to the upside. So he's taken what we know about Bitcoin and solving problems. And then he said, well, let me go into TradFi and let me leverage some of the arbitrage and outright strategies that love volatility, especially if there's more upside than downside vol, which is the best kept secret of Bitcoin. And he's tapped it. You're going to see more people doing this. And again, I mentioned Dylan because that guy can sniff it out like nobody. And he was picked up to help advance this strategy with a firm or two.
I love that you said the best kept secret in Bitcoin, because it's like everybody talks about volatility. It's like, if it's in your favor, what's the concern? What's the problem? It's only a problem if it's not in your favor.
oh, no, I agree. I think there will be more, whether it's via the convert market. Like I saw you share an early riders piece of material yesterday. I mean, you just look at Apple, Microsoft, all these giant Fortune 500 companies sitting on literally trillions of dollars of cash, and they're just buying back stock. They could diversify that strategy and just buy Bitcoin and put it on the balance sheet as well.
Yeah, I mean, I think about, I was texting you last week. I didn't share it. I don't know. I don't think I shared it publicly, but in like the span of like 2 hours, there was 3 random things that happened, just kind of breaking down, where money's breaking down. There was a picket for Southwest Airlines in Dallas for 17% increase. So that ruined a whole day of whoever was flying through those routes. Stopped by a coffee shop that was smaller, new, was closed down after 6 months. And then I heard from another person anecdotally that their flight was supposed to go to Tahiti for the honeymoon. They deboarded and onboarded 3 times. They sat on the tarmac in Miami for 8 hours. And then their luggage ended up there. And you just had that was just in like a couple hours on a last Friday morning. And I was just thinking about this whole notion of the money's broken. So then coordinating economic activity and what people need to actually feed themselves, and the picket, and then the degradation of services, it all starts to tie in. And the way you offset it is by holding a better form of money, because if you hold a better form of money, you don't necessarily have to increase your prices, because increasing your prices effectively or theoretically should lower margins and reduce the amount of people that can purchase, which is a negative feedback loop. And to the point you just made, Marty, is if margins are compressing and inflation's running and you hold a better form of money, now that helps offset that. So there's like the arbitrage play that I think is on the financial side, but then there's the natural like self-preservation play that I don't think most have woken up to. And it's almost existential at this point, because I think everybody here agrees that inflation is probably 10 to 20% annualized since COVID with the amount of money printed. And so it just feels like businesses have to adopt it, or they're just going backwards until they kind of have to close up.
Yeah. No, we've seen this within our portfolio 1031 over the last couple of years, where it's been really hard to raise capital, just not for Bitcoin companies, but for any company that doesn't have AI attached to their business plan, due to where interest rates are and liquidity, or lack of liquidity in venture markets specifically, but because all of our portfolio companies at 1031 have the drive to build as much Bitcoin on their balance sheet as possible. Like, despite the fact that capital markets were pretty restrictive over the last 2 years. Luckily, the price of Bitcoin went up, so we've actually seen a lot of company runways extend just by having that Bitcoin treasury cushion. So it prevents them from having to go to the market to try to raise more capital. It's an incredible tool for businesses, whether you're a startup or a publicly traded company.
And that's something that I know Michael's touched on with the cost of capital, which I'd love you guys to go into if we had the time. But back to Marty, what you were saying on raising money in AI is, I have one of my two of my boys are in a startup and they're looking to raise capital, and the feedback has been that people want to have a they want to make money quicker, and they're in a sustainability business, and it's probably got a normal runway, not an accelerated runway. So when you say AI, are people saying that because they want productivity gains, or they think it's going to be an Nvidia hot take and they'll be able to turn around 6-12 months and make a return?
Well, I think the hope is that the end product of an AI company will lead to better productivity for companies and individuals more broadly. But I think we're in a hype cycle, and the relative nascence of consumer-ready AI is such that venture capitalists, whether it's rightly or wrongly, is to be debated, but believe that there's high asymmetric returns to be wrought by allocating AI at this particular stage of its nascency. That's what I would say. Michael, do you have any thoughts on this? I know we talk about this quite a lot.
Well, I mean, I think it goes back to the notion of like people buying BlackRock ETF aren't buying BlackRock, they're buying a meme stock. It just happens to be Bitcoin labeled, or IB, whatever the IBIT or whatever the ticker is. It's the same with AI. It's like last cycle it was crypto in 2021, and now it's no different in my mind than like the Iggy Azalea coin or whatever. It's like you're just like picking up momentum on different areas of the market, graph to what somebody's like selling, and then you have the narrative or the overhang to like go into that market, because I think it's like over 50%, some crazy amount of venture that's gone into AI. And all the way and up and down the stack is like, you can't from your LP get in trouble for allocating there, because to Marty's point, it's the next thing and everything that goes along with it. The companies are raising larger rounds. There's all this infinite liquidity to chase. And then if it's only going to AI companies, it gets bid up. So it just reminds me of a similar thing. It's just in a different liquidity pool, a different quote unquote sophisticated area of the market that says, oh, we're on the venture side and, we're going to allocate to the next Amazon, or we're looking for the next Amazon. But obviously, like, that's just capital destruction. We've seen it for decades. It's just I think it happens at an accelerated pace because of just how far along we are. In the same way it's happening at an accelerated pace today in the meme coin thing, because that was the point earlier, Marty, when you referenced we've seen it with like the next better Bitcoin, or the idea that it can be done. At least people were trying that they were trying to make a better Bitcoin. Like, it's not even a fake. Like, nobody's saying that this is like a cryptocurrency is a better or doing anything compared to Bitcoin, or even like these other tokens that are supposed to do other stuff. They're literally just saying it's a mimetic token that is, you're trying to pick up steam, like similar to the Trump coin that launched. They're not even pretending there's fundamentals. It has no utility other than the mimetic nature of it.
Yeah, and Joe Weisenthal, he actually wrote in his newsletter this morning. He sent a tweet out earlier this week, but it looks like he followed up with a newsletter. But he had this great tweet: the big change in crypto culture. In today's market newsletter, I wrote about how crypto libertarianism went from building systems that were robust against outside interference to influencing politics in order to protect the right to gamble on meme coins. So, to your point, Michael, like I remember in 2017 to 2021, when Ethereum was proclaiming that they were going to flip in Bitcoin, and they were talking about all this esoteric governance and the world computer, virtual machines, and it was really focused on like tech innovation and changing meat-based governance interactions with a virtual machine, and it's completely just evolved or devolved, I would argue, into let's attach a name to this coin and see how high it can pump.
Yeah, it sure feels like in the sideways times for crypto, for Bitcoin specifically, and crypto in general, people create narratives. They're trying to find some way to like push adoption to the next level, and then these things get ahead of steam of like, okay, well, we can do this, and we can lobby, and we can try to get Trump to talk about NFTs or whatever, and then you create a whole culture, a whole movement around some red herring, some aspect of this technology that doesn't matter, but people are pushing it as a way to try to drive adoption, to try to make something matter. And at the end of the day, all you have to do is just wait for the economic reality of Bitcoin to play out. But we're so impatient, we can't help ourselves. We're trying to, people end up trying to latch on to something that's going to move the needle. And in the process, we create the next wave of noise. And it's against human nature to do the hard thing of just sit and wait and let Bitcoin's supply schedule play out. But it's funny that we have all this problem of the constant cycles of what's the next wave of bullshit in crypto, but it's because crypto people are so impatient that they create the next wave of bullshit as it starts off as maybe a good idea and snowballs into something that is a true distraction and an impediment to Bitcoin adoption and for the next slice of the adoption curve.
It's actually a great point. Like, it's kind of fundamentally shocking. We know like how much money has come into crypto and all the things, but Mark, to your point about AI, it kind of sounds very cynical to say like most people have no idea what they're doing or talking about, specifically in venture or AI. But then when you go back and break down all the capital that's come into crypto over the course of the past 3 to 5 years, looking for the narratives, like they genuinely believe it. Like they didn't, I always joke and say it's like they read the forward to the Bitcoin standard and then, or they opened the book and they never like even read the forward. They just like closed it. In the sense of,
or worse, or worse, Michael, some of these folks cut out the forward for the Bitcoin paper and put it on their deck and then had all the other garbage behind it.
yeah, I mean, it's exactly right, because like to Marty's point earlier, like somebody's mad about whatever they're doing, and then the Ethereum people are mad at Solana, and the Solana people are mad at the next one. And it's like all this money and all this sophisticated people like couldn't understand that there's only finite scarcity once. You can't be behind it. And so if they can't do that, then what? Those are the same people running the AI people. They're no better. It's like it's all the same allocation strategies, all the same first principle thinking. So the whole thing is like how is mucked in loss of signal, and then the tokens are just the fastest to go up and down, so you just get to see it quicker. So like Bitcoin's the ultimate canary in the coal mine in global markets because it's just like the first thing people are going to run with, and the first thing people are going to sell off.
Yeah. I mean, and to this point, we can transition to the topic we have on the list, which is the fact that Nvidia, not really transition, but continue this conversation with Nvidia at the center of it. Logan, pull up the tweet. I had James Check, also known as Checkmatey, on TFTC earlier this week. And just in passing during our conversation, brought up Nvidia. And I hadn't looked at the chart in a while. And I just sent this tweet out yesterday because we basically went, we admitted on the show, like we have no idea what's going on. Nvidia, is it legit? Is this price appreciation, is there actual oomph behind it? So I tweeted this out, just genuinely looking for people's opinions. This looked like a healthy chart, and as you can see, it's completely parabolic. It's up 339,500% since 2000, and most of those returns within the last 8 years. And the response to this tweet was mixed. It was a bunch of people like, put it on log scale, like it looks good, AI is the future, and a bunch of others like, this is late stage melt up behavior. And it begs the question, like going back to the discussion about AI and all the venture capital that's been allocated to it, like can Nvidia hold up this performance? I'm a bit skeptical, especially if you consider, I believe they're trading at like 48x multiple on the revenue, which is, the revenue is certainly increasing by a lot, but even so, the multiple they're trading at is pretty high at 48x. I believe, if I did my math correctly the other day. And then on top of that, yes, all this venture capital has been allocated, putting money in the pockets of these startups, which are able to then go out and buy the chips that Nvidia produces. But unless a lot of these companies find product market fit and are able to monetize, it's very expensive to buy these computers or buy hosting, buy compute from hosting providers. And so, what do you guys think about Nvidia? Is there juice behind this? Should we put this on log scale? Is this a step function improvement on the price of the company because AI is truly here and is going to change the world, or is this .com bubble era activity that we're witnessing right now?
I think that's the question. Is it .com era? Is this today's Cisco? And I think I would say I'm going to split it and be the median, for the middle child I am, and say that I think it's somewhere between a .com and a mid 2000s Amazon. So Nvidia's stock price, I mean, their numbers were crazy good, beat everybody. But instead of what you see with maybe emerging companies where they get the not low hanging fruit, but they get the smaller companies to buy in, and then they get the larger companies over time that are resistant. This was flipped. Nvidia sold to the large caps. Let's look at the top 5 companies, or 30% of market cap. If they have to make the next sale, it's going to be an incrementally lower ticket. So they have to spend more time and more efforts to get, I think, incremental sales from the non-Googles, the non-Microsofts, et cetera. So I do think it tamps down a bit, but it's not going away. I mean, anyone who has friends who are lawyers, God bless them, the old model was to have your junior lawyers bill out at $300 an hour, and then you'd bill out at at 700, 1,000 if you're in New York. But technology took out that layer, and clients would no longer allow that. So their margins got compressed because of technology. So AI is an advancement of what the internet provided by just making things more productive. It's going to rip out margin. Companies are going to continue to adopt AI, but like what you said, Marty, the product market fit, we're all still figuring out how to use it. So there'll be a bit of a hiccup, soon enough.
Yeah, I love the Cisco comparison. I don't know enough about AI in general, and certainly not Nvidia's business model and balance sheet and forecast, but it sure does remind me of what kind of hardware company really ever has like the killer lasting like dominant position the way that a Google or an Amazon has had. I guess you could say Apple, but that's because of the network effects of people using that hardware. And if it's a commodity hardware like GPUs are, then I have such trouble seeing it remaining the largest company in the world. And it feels like the mimetic investing has crept into the stock market in a big way, on a bigger and bigger scale over the last decade. It's
what makes you say that, Jesse?
Yeah, right. It's not new to crypto people, but the sort of mimetic investing that we saw in 2017 turned into Zoom and Peloton booming in the narrative environment we were thrust into during COVID. And now the narrative environment is AI is going to change the world. And so here's 2 prior examples: the COVID climate, and then also the .com climate of overhype, causing particular companies to be parabolic the way that Nvidia currently is, and it's just not sustainable once the narrative shifts after enough time has passed. I feel like we're in that sort of pattern here, even though it's the Gartner hype cycle where AI will change the world, but perhaps not as much as people currently think it will, and perhaps 10 years from now rather than next year.
Yeah, I can't say anything that the guys haven't shared, except for my favorite part about Nvidia is the tweet from this past week that you saw. Like the main tweet was the boomers got the gains of Nvidia, or like the gains of Bitcoin, without having to suffer from all the volatility and sleepless nights. And then below that was they can't keep getting away with it.
Yeah, and I think I'm going to throw my hat in the ring here too. I genuinely don't know how this is going to play out. I do have my leanings. It does seem a bit hypey to me, but could be wrong. There could be massive product market fit. I mean, I use AI every day at TFTC. Is that the killer app that's going to lead to insane revenues for the companies leveraging Nvidia's GPUs is yet to be determined. This is very capital intensive businesses, and can these companies produce the revenues and cash flows necessary to pay for everything? But generally speaking, like just outside of product market fit headwinds, I think you have to look at energy supply headwinds as well. You have to plug these GPUs in, and that's a big trend and theme this year is the highlighted lack of energy infrastructure that exists today to actually supply this market. So could that put a bit of a damper on this run potentially? Then obviously you have the key man risk of TSMC and saber rattling beginning to heat up around that small island in the Asian Pacific. And yeah, I don't know. There's cautiously optimistic. I mean, I would like to see AI increase productivity. Of course, there will be some externalities that come with that, but I think overall, in the long run, will be good for humanity. But whether or not that is happening right now is questionable, I would say, at the very least.
Whether you've been buying Bitcoin for years or just getting started on your journey, our multi-institution custody solution is the safest and easiest way to custody your Bitcoin. With Onramp and our partners at BitGo and CoinCover, you can sleep soundly at night knowing that your Bitcoin is safe from exchange failures, the loss of seed phrases, and broken hardware devices. Onramp's multi-institution custody solution eliminates any single point of failure, distributes counterparty risk, and minimizes required trust, all while providing greater assurances that a client's Bitcoin is secure and auditable on-chain. As a client of Onramp, your assets live in a multi-sig vault controlled by 3 distinct entities, none of which have unilateral control. Onramp provides products and services that honor our clients' ownership and control of the underlying asset. To learn more about multi-institution custody, check us out at onrampbitcoin.com.
What isn't questionable is that we have a debt problem here, gentlemen. We have a massive debt problem. Another big headline of this week is the interest expense on the U.S. federal debt has officially surpassed the annual national defense spending, well over $1 trillion annualized. And so as of right now, that makes the interest that we're paying on the debt the 4th largest expenditure behind Social Security, Medicare, and Medicaid. So we've got 4.
An image of that from the Daily Shot in the chat.
Yeah, we've got 4 overt Ponzi's leading the top of the charts for expenses here in the United States.
What are they? What are the first 2, I guess?
Social Security, Medicare, Medicaid. Okay,
and then interest expense.
Yeah, on the debt that's never going to be paid back. So
yeah, that's quite a roster. There's your 4 horsemen right there.
Mark, it's interesting tying what Marty was referencing with Nvidia to the debt and just money being broken. I remember when we first met, or when you came on probably 6+ months ago on your LinkedIn, you had a Credit Suisse was like, it was your title, what you're working on, but the end was, it stuck with me, managing alpha decay. And it's like this notion of you were looking at the markets and you recognized that monetary policy and all the things associated with it were just making it harder and harder to return capital. And then now you focused all your time on Bitcoin because it's the thing. It was something that hit me. Like, I don't know if you have thoughts on that, on how like everything against, whether it's the debt coupled with, this late stage, exactly, fiat melt up, how, you basically dedicated the rest of your career to like this asset class because of everything you've learned.
Yeah, it's like, know thyself. I was working at Croesus where we all knew what the stock was not going to do, which is go up for reasons that became evident. And I was working with hedge funds, very bright people, tremendous information, resources, and they couldn't beat the S&P. And even risk adjusted, they weren't that great, except for maybe 4 or 5 of them. So I knew the problem of inability to make money on the hedge fund side. I was at a hedge fund. We did close it because we did underperform, and I missed something, which was a move higher and the Fed overtaking the market. Off the '02 bottom. I was still fundamentally bearish. So I stepped back and started to look at things kind of like, not to the degree maybe that Luke Roman does, but from a market standpoint, referencing that slide that you just put up there. And it became evident that there was a centralization of liquidity. And what hedge funds love is accessing liquidity. And the banks were no longer a warehousing of risk. They were like, it was like poop through a goose. They no longer had the balance sheet to absorb any shock. It was all at the mothership of the Fed. And we do have a slide in one of our, if you call up or hit us on our website, we'll share it with you on the terminal or one of our sales reps. The Fed and money supply. So we all know the money supply has gone up. We printed, we talked about the debt issue. But it's like, well, where's it coming from? The Treasury? Yes. But it's also coming from the Fed. The Fed has stepped in the shoes of the banks. They accounted for something like 10 to 12% of M2 prior to the '08 crisis. They would get open market operations. They would buy bonds, flood the market, or, and then give cash back through a simply book entry back to the banks. And the banks would either lend it or buttress their cap ratios, however they want to deal with the cash, 10, 12%. But since then, it's been as high as 40%. There's basically, instead of the Fed being the lender of last resort, they are now the lender of only resort. They are providing almost 40% of all the money supply in the US. We are centralized. And when that happens, not everyone has a line into the Fed to get cash and capital. So that's why, back to like alpha decay, when you were talking about it, maybe hedge funds, shouldn't be around. Maybe they should be. But I'll tell you right now, there are going to be fewer of them because liquidity is dear and not every hedge fund has access. And yes, I saw Bitcoin as being outside the system, a term that, people have used, but we can talk about what that means. And back to trying to nail it back to AI and not AI, but Nvidia and its loop higher. What's great about Bitcoin is Bitcoin knows it can't go to the moon in a day. It has 4-year cycles where almost by design, not almost, by design, circles up like a Zamboni across the ice, and it covers up its tracks and works its way up in a spiral. Like, it's really magnificent, the structure of this, in order to play the long game of growth, adoption, and service. So hopefully I landed that plane on alpha decay, where it came from, and what's going to win coming out of it. Oh, yeah. I mean, we have more slides to show, but let's keep talking.
Well, that's a good one, Marty. I think you'll appreciate. We've been talking with a lot of pensions, and some are positive, and then some are a lot of emails about, naturally aversion to it. And Mark put together with Jackson a really nice slide on one, either 2 or 3 and 5 year returns, and basically just like a nice cordial response of maybe, Mark, if you curious, like walking through this, but then also just your peer group with your transition. And this is quasi your peer group, much more your peer group that are sitting on the other side of these emails than us. Curious, like what's going through their mind and how they're having to navigate this, because they see SWIB coming in, but they're still apprehensive. They're still thinking we need to see more. If you could just walk us through some of the thoughts there.
Yeah, it is bias and familiarity. Back to what Jesse was talking about with the OGs. Are there 10? Are there 100 people that are still storing their hundreds and maybe billions of dollars worth of corn on a Raspberry Pi in a popcorn can? Maybe. And why aren't they changing it? Because it's worked. Investing in tech stocks has worked for many people. So we showed that slide to say, yeah, it has worked. But within the SFINT, that subsegment that's done pretty well and definitely outpaced the S&P, there are only a few names doing it. So you are buying an index just to get long one or two names. Bitcoin is a single name that consistently 5, 3, 1 year has outperformed what you have hung your hat on. And we're thinking that the problems that are with the federal government and with monetary policy now governing everything really, or dominating the scene, that maybe there could be even risk to some of the economic benefits or tailwinds that have benefited these companies. So you're right, Michael. They basically still say, all right, I know why you're shoving this in my puss. I'm like, I'm not shoving your puss. I'm just showing you that this animal is not a Ponzi. It is not a tulip. The tulip craze was 3 years. This is 15 years and really 45 years in the making because of the technological innovations that underpin it. And so then they say, okay, and it basically doesn't change them, but it gets a second meeting to have the discussion advance. So yeah, that slide has helped, because at the end of the day, people know that capital is permanent at these endowments, but employment is not. So they need to deliver, and a lot of them are underfunded.
And so, Mark, what I feel like putting my hat on from before I was a Bitcoiner, I would a common defense, I think, or like a justification for it all, an explanation would be, oh well, there's going to be reversion to the mean. So you got lucky so far with Bitcoin. You got the good stuff, and now there's bound to be some reversion to the mean, and it's going to underperform, and then you'll end up kind of in line with other assets. What are your thoughts on that, or how do you respond to that kind of natural objection?
Well, Jackson's already responded. He said, now there are two questions that come up when we show this slide of 1, 3, and 5 year. What about longer? So actually 3 questions. And we say we don't show a 7 or 10 year because it just would blow up. It would look like an Nvidia chart because the basis is so low. If we look at any 4 year rolling period, the worst return is, I think, on the order of 28% compounded, the worst 4 year return. So it does have a reversion to a mean, but the mean does lift over a 4 year period. The mean can be low in a 1 year. We saw that last year. So if you're trying to fund liabilities out 5 and 10 years, then this is how you look at things with that long range view. The other question is,
yeah. I was just going to rephrase that as so in your mind, the mean for Bitcoin is skewed to the right. There is a sort of a mean, but it's already like highly positive CAGR territory, and because of the inherent structure or properties of Bitcoin and where we are in adoption.
Yes, because of the problem in traditional finance and people, looking over their shoulder. Let's talk about behavior. Economics is really about behavior, study behavior, and how it impacts wealth creation, storage, and transfer. And people's behavior is changing for the first time in suburban Chicago, New York, LA. Parents are saying, "Oh, you got into UCLA? Yeah, $68,000-$75,000 a year, and you don't get to go to graduation. Oh, you also got into University of South Carolina and you got some money? Guess where you're going, honey? I know no one in our community knows about USC, South Carolina, not Southern California. You're going there because it's half the price and it's a smaller school and we think it delivers a value." So people are everyone knows that wages aren't going to grow into the moon, but costs are going higher, and they're going to value. They're not going to what has worked for people. So I think I mention that because people are open to the idea that the way their parents made money and had stores of wealth, that may not be the case. And when you talk about education and people making changes to maybe going to a city college for a few years or to a non-name school, even though they have the money or high, a better known school, I think, Jesse, that's why the 4-year mean has persisted, because Bitcoin survives based on its decentralization and security, and it's been rewarded by having people wake up and realize that it is a better store of value than what they've looked at otherwise. And then lastly, the question that Jackson put out to the team, or to the endowments, was the next question we get is, will it persist? And then we said, give us a call. We'll go over the reasons why we think it will persist.
This is what has me super excited about six-figure Bitcoin, because when I hear Jesse say reversion to the mean, I think of what would cause it, or why wouldn't it still go to zero? And when I think of six-figure Bitcoin, I think it flips from, wait, can it go to zero, to, wait, where can this go, or where is the ceiling? And then that changes the whole dynamic of, obviously, price. And I think that's the real IPO moment, or the quote unquote IPO moment. That's like the change in step function of, wait, this thing isn't going away. And now Apple and these firms can step in, because is 1 million the top? Is it 10 million? Like, is there no top? I think it's still in the realm of, like, this thing can go backwards. And that's the reversion. The true reversion to mean is zero for them.
It's such a good point that, like, the general mainstream market probably views, like, the ceiling of what's possible as 100,000 for Bitcoin, and then suddenly, when you get to 130, 150, then all that sort of prior assumption of, like, oh, this thing could only ever possibly go to 100,000 gets thrown out, and then Wall Street finance in general is forced to think, well, how big could this thing get? And only then will we start getting the people outside of Bitcoin making comparisons to gold, or something like that, and saying, oh, actually, to get to parity with gold, this thing would have to be a $600,000-$800,000 a coin asset class, and actually it could be higher than that. And I think you're right, Michael, that there will be a sea change there, a paradigm shift in terms of how people think about what's possible for Bitcoin once we get north of 100,000.
Well, Jesse, I think that Buy Bitcoin poster that the guy held up behind Yellen went on auction.
Yep.
I think your asset map will be similar to that when Bitcoin flips gold, on that value assumption that's going to happen. When we kept having making it from 500 million billion. Remember when you first came out? I think,
yep.
And it kept growing. So in the chat, we can share that with people. But back to price, Marty, you showed Nvidia. Can you show that? I don't know if you can show that again. The chart going up, or piece probably still in our mind's eye.
This is a weekly corner of Mark's prediction. Here we go. Okay,
we'll roll it out. Thanks for the cue, Michael. So look at this. I was like, wait a minute, 135? Are they using, like, what type of scale is this? I forgot about the stock split. So the question is, when will Bitcoin be split? And that is a huge hurdle with people's heads. How can only Berkshire Hathaway can have, 5 figures or something, or 6 figures? And once, a regular stock does that, they bring it right back down to, 2 or 3 figures, so people can be more comfortable buying it. It is a perfect example about how non-economic factors come into consumer behavior. And they're not necessarily ones that lead to good outcomes. But Michael, go ahead, kick me off in the direction that you were talking about when I came in on 2 wheels in the Schwab network on my first day and laid out some price predictions.
Mark was very bullish on Bitcoin post halving. That's as much as I got.
That's exciting. So I've been on some media outlets, and one was Schwab Network with Nicole Pettidelis, and people love price. So in my former firm, I did it, and I re-upped the numbers, pen to paper, and had a 110 2024 low case and a 2025 high case of 450,000 for Bitcoin at the end of 2025, which I consider the end of the peak cycle. And so that got a few calls from folks, including Michael's like, hey, Mark, that's great. We're glad you joined today for your first day. Would love to have a heads up on the on the price target. And so we went through it. But talking on the call before this, when I would speak to investors about how do you get to 110, how do you get, where is it like that? I said, well, let's take a step back. Why is my mid case closer to the base case? Why is, say for 2024, it was 110, I think 140 and 180 something, or 130 and 180. Why is the mid case slope closer to the base case? And it's because Bitcoin's, which is the question we want. It's like the hidden. It's like in Willy Wonka when Charlie returns the wrapper at the end and says, "Here you go." You show integrity. You show you've done the work. The reason why we don't have an evenly distributed, like most stocks are, low, mid, and high, is because Bitcoin doesn't behave that way. Its return distribution is skewed far to the right, so that when you look at its distribution of equities and bonds, they're kind of normally distributed, call it a bell curve. Actually, they have a slightly negative skew. Bitcoin looks like one of those logarithmic, it bounces and punches far to the right. Like I think in the last 5 years, its average quarterly rolling returns or a 63-day return, it's like 23% on average. Its best quarter, I think, is like 220%. Its worst is 60, a 4-to-1 ratio. No other asset has that. You have to basically buy an options portfolio to get that kind of skew. And that's why the institutions are coming. So I'm getting around trying to switch it from saying, who cares about the nominal value? Most people do. 450 is a big number, in 18 months. 110 would be welcome. That's what I put pen to paper in the low case. But it's how you get there. And that is where we get some invitations to explore that, Michael, is the performance character of Bitcoin is so different that it takes a little bit of understanding about, well, why does it operate that way? How does it have that distribution difference?
Yeah.
Did I cover myself pretty well? Did I cover my?
No, you just got me excited. I just feel grateful truly grateful. Like we get to build all this stuff knowing that it comes there. I think Marty's seen the most cycles, but everybody's not talking about it. And you just get to like focus on the thing. And then the market takes off and it's like Christmas and you knew it was coming and you put yourself in a good position and then it does the rest.
Yeah. Well, and tying this back to what we were talking about earlier in terms of the national interest expense surpassing defense spending, Logan, if you could pull up the TFTC article that I wrote this morning again, I think I wrote it at the end of the news. Like we're gonna get to the point where people have to be aware of this. But go back up to the Luke Roman tweet. I think we're talking about this we were talking about it not flippantly, but just in passing. Like interest expense is now bigger than the defense budget. But if you look at historically over the course of millennia, anytime this has happened to any large empire throughout history, it has marked the end of the empire. So like once you have the amount that you're paying to cover the interest on your debt surpassing defense spending, like that is a critical moment. And I think most famously in ancient Rome, when they debased the currency, the denarius, to such a point where the military began to recognize that it wasn't worth anything, they stopped defending Rome, and the barbarians were able to come and sack the city, and it had a very slow and painful decline into the Dark Ages, the Middle Ages. And we've reached that point in America. And Logan, if you pull up the article again, and there are sort of soft metrics of despair. Luke Roman was citing Niall Ferguson. It's his index, or his law that he coined after writing many books on the subjects. And you can see that despite what many people in DC would lead you to believe in terms of the strength of the American economy or America at large, things are not going as well. We're the sixth. We have the sixth largest incarceration rate per capita in the world. Again, this next chart is interest expense going over the debt spending, keep going down, but you just go down the list. China's far surpassing the amount of naval ships they're building compared to the U.S. If you look at the average age of a politician in the U.S. compared to the median age of the population, we are a large outlier, and basically says that our politicians are extremely old and out of touch. Keep going down. Confidence in these institutions is at all-time lows over the course of the last 5 decades. The percentage of high school girls who are experiencing persistent feelings of sadness, hopelessness, thinking about attempting suicide, or even attempted suicide, these numbers are going up. We can keep going. I don't want to get too depressing here, but like statistics of despair are melting
Too late,
up
Marty.
alongside the debt and the debt expense going up. And it's because we've completely corrupted the pricing mechanism of the global economy, which is money. And all of these problems, I strongly believe, stem from this inherent corruption of the most important pricing mechanism in the world, which is money. And until we fix that, none of these problems are going to abate. They're going to continue to get worse. And as it pertains to the debt situation, and tying this back to why I went on this long rant, is all these allocators, individuals, businesses, endowments, institutions, state governments, federal governments, they're going to have to wake up to the fact that the money's broken. They're going to need a solution to that problem, and Bitcoin is going to be there. And so whether it's the psychological effect of Bitcoin going over 100,000 or the psychological effect of people coming to grips with the fact that the dollar and the debt system is fundamentally broken, it's going to be a reality that people are going to have to confront sooner or later, and the sooner the better. And the later is going to lead to more pain for people.
Yeah. Marty, I jumped in with a little quip, but I also, and I fully agree with you. The one reason in 08, I was very negative on the markets and Dower. And the part I like about Bitcoin is that it actually is a way, it's a remedy for all the things you talked about. And, I agree with you. The mental health issues that are going on in this country, Jonathan Haidt, excellent resource in case anyone has ever doesn't know him. He does wonderful work. He was part of Coddling the American Mind. He's a social scientist out of UVA, now NYU. He talks a lot about what you brought up, Marty, empirical support, no agenda, and we don't either. We're just pointing out the facts. We're making the tie to the fact that money. Haidt doesn't do this. He says it's parenting. Among other socioeconomic dynamics going on, or parenting, as he calls it. I agree with you, and that's hard to find. I think people in this call maybe who don't, that, unsound money, drives it. And I'll end with this one point. People say, when was the moment that you got involved in Bitcoin? It was a few things. But one that was latent, and I'm not the smartest, sharpest pencil in the box. I sometimes take time to come around. In 07, I brought my family, my wife and I, and our 4 boys. Oldest was maybe 12, 11, to the Met. And there was an exhibit called Glitter and Doom. And it was the artwork of the Weimar Republic. And it was kind of behind these stalls, had a sign. No one under age of 14 should enter. I'm like, it's art. Forget it, guys. Let's go in. I took one turn, saw a few paintings, and whipped the boys back out. It was the most disturbing artwork that came out of that era because hope was lost. And I know that sounds hyperbolic. It may not, I'm not a prude, but I'll tell you, you had to be experiencing some things that we haven't experienced in quite a while to draw that artwork. And a lot's been written about it. So, Marty, I fully echo. We don't talk a lot about it, but we're living it. There's something going on.
Wow. Glitter and Doom, was that the name of the exhibit? That is fascinating. It
was, and obviously it really hit me. And then when Bitcoin started to come up and I started to see the alpha decay, that Michael was talking about, that I messaged, and saw things break down in the markets, and then listening to Height and then witnessing myself about mental health breakdowns, I'm like, I've seen this before. And it really was an impactful, and you can't really tell as much you can Google it and look it up online. Man, seeing it live, it is eerie.
Yeah. And again, let's end on some optimistic, positive notes. That's the beauty. One of the beauties of Bitcoin too is, I think, for the first time in human history, we have a viable off-ramp, a way to manufacture a soft landing outside the purview of the government and central banks, which has never existed before. And obviously individuals like us and many others around the world who are building the infrastructure to make it easier for individuals, companies, whoever wants to onboard to Bitcoin, are creating the conditions where we can opt out of that system of despair into an accretive system that sort of raises everybody's boat because you have better money. And we can work our way out of the problem. And I think what we're doing right now is perfectly evident of that. We're communicating from 4 different parts of the country over the internet to get this message out there. And so on the communication side, the message is getting out there. People are waking up to the fact. For anybody who's listening, I would go read the Gold Money annual investor letter that came out this week. Roy Sabag is a friend of mine, used to sit on a board with him. That annual letter it had a really good section on the change in discourse around economics. And he asserted, and I would agree, that the Keynesians have certainly lost the stronghold on economic thought. And the Austrians are rising up in terms of really asserting themselves on the battlefield of economic debate. And I think convincing individuals, winning hearts and minds to steward us towards a more sane global monetary order.
Marty, before we wrap, just curious on that same note of like Trump, the election, and the populist side of this playing in, like, how does that tie in? Because I hadn't heard Bailey talk about this stuff, and I heard this week he went on one of the pods, and you could see an angle of like there's a lot of people competing for his attention, and we've gotten loud enough that if you can put some dollars up and get in the ear, so it's kind of a dance. He says one thing, you show up. So he referenced it to like dating. I kind of, for the first time, I'm still very skeptical, but first time seeing like how it would benefit him, and then he could these concepts we're talking about actually like matter, specifically from like a platform that Trump would raise on. So just curious, like how you think about how this plays out over the next 6 months.
I think Trump's going to continue leaning in. I think it's good for him and his campaign. What happens if and when he gets elected and push comes
450K Bitcoin per Mark will happen if I'm convinced of it if Trump's elected.
I mean, I wouldn't be shocked either. But I think
that's a bold prediction. 450K Bitcoin if Trump is elected.
I think the thing rips. I think there's no. That's effective if he does even half of what he says he's going to do, and the way that the infrastructure, everything that's kept this like lid on all of this is basically like nobody knows what's going to happen. Where regulations, all the banks, right? You basically give the green light. I would imagine that this industry is like ready to play in the U.S.
Yeah, we're going to mine all Bitcoin here,
and it would ensure that it becomes like a partisan wedge in our society of like, Bitcoin is right wing and not for everyone, which would be the downside of that. But
potentially,
well, unless Biden picks up, picks up the next 6 months as well.
Yeah. I mean, I've been saying this, and I had Matthew Pines on TFTC a couple of weeks ago, and he echoed this. Like, I think the way Trump's positioning it makes a lot of sense and is actually the right way to position it. Like, the best thing he could do if he gets in office is nothing. Maybe like he can make it legal tender and eliminate cap gains tax. That would be something he could do that would really accelerate things. But just get out of the way. Like, I was in Texas earlier this week talking with some individuals that are in contact with the state, and they were mentioning that the state has all these stranded wells, abandoned wells that they have nothing to do with. And like, that is a low-hanging fruit where maybe as an individual state like Texas, you don't want to take the risk of allocating treasury dollars directly into Bitcoin and making that overt investment. But there's just pick the low-hanging fruit, these stranded wells. You partner with a private miner, allow them access to these wells, and you mine Bitcoin with them, do a rev split. Maybe that's how you accumulate Bitcoin. You mine Bitcoin and roll it into a Bitcoin mining permanent fund that the state manages. You can apply that at the federal level too, where, I mean, I don't think many Bitcoiners are going to do this, but you can accept Bitcoin for taxes, accumulate Bitcoin that way. Like, I think the way Trump's positioning right now is positive in my mind, in terms of, it seems like he's going to make a concerted effort to ensure that Bitcoin and the industry around it feel safe in Bitcoin in the United States, and Bitcoiners as individuals feel safe. And I think once, as you mentioned, Michael, people get the peace of mind that they can operate without the fear of the federal government coming down and throwing them in a cage, like, it's just going to be gangbusters for what's created, whether it's in the mining industry, the custody industry, the credit system built on top of Bitcoin, using Bitcoin as super collateral. Like, I think it's going to really explode in a good way. And I think that'll have positive externalities on the health of the American economy overall. It may not be clear to everybody how that ends up in an overall positive for the American economy, but it's crystal clear to me. We just got to start pushing Bitcoin into every nook and cranny that we can, and then we'll look up one day and be like, oh, that actually provided a nice floor for the economy and actually help people pull themselves up from their bootstraps during these dire economic times.
Yeah, Jesse and Mark, if you haven't listened, or anybody listening, that was probably one of the highest signal pods I've heard in a very long time, Marty and Matthew Pines, because it broke down like the geopolitical situation, everybody vying for talent, from, just the sovereign nature of allocating now, to go from an LP perspective and get access to the best talent, where it used to be, the actual government entities. It was just incredible. And I think that like it impacted or influenced also listening to the Trump situation, because it's an actual like, from a, like, on that pod they were describing, Marty will be able to fill this in, they're describing like how we're behind in certain things, but then brought up like the amount of Bitcoin that's stored in the US or mined, but also the amount of Bitcoin holders is the largest in the world, in the United States. And there's natural things that we're ahead at. If we want to maintain that relevance, like, we need to be able to have the right people leading, and that like angle with Trump was a big one. And Marty mentioned the infrastructure, that like, once people understand they can build here, it's a very large leg up on other actors that are, trying to basically bring AI and other tooling to their markets.
Yeah, we're going to win.
Agreed.
Things are a lot of desperation out there. We're not going to sugarcoat it. You have to identify and recognize the problem, admit that it exists, and then go work on solutions, which is what we're trying to do here. And you should too. That's the beauty of Bitcoin. You can work on the solution. It could be a small act, as small of an act as buying $5 worth in something like Cash App or River. It's a vote of confidence in a system that is external to the insane system that we've all been subjected to for our whole lives, and is getting out of control. Like the newsletter I wrote this morning, I was writing it in haste. I really wish I could expand on it, but like, we live in the era of exponentials. Like, debt's going up exponentially. All the spending, whether it's Social Security, Medicare, Medicaid, defense, is going up exponentially. That Nvidia chart is exponential. And it feels like, I mean, you held up When Money Dies, Jesse. It feels like parts of that book where the stock market and everything was going up and everybody thought they were rich, but they didn't realize that their money was losing value extremely quickly.
Glitter and doom.
Yeah. Don't look at it late at night before bed. I'll do a sunny day, sort of.
I've already pulled it up. Some really interesting, it's exactly as you say. It's some warped and grim. There's a malaise in all of these self-portraits in particular of like roaring 20s, but with a darkness. And I kind of feel as reminiscent of where we are right now. Everything's great, but everyone's sad.
Yep. About our humanity. Kind of what a topic at G7 about what AI or really the money can do to our humanity, which is what Marty was going through the slides. When you see it in artwork and coming from other people who maybe don't know about money, it's just manifesting in different spots. Worst is in our youth, is in the kids on that. And that's why, like, I love how David Bailey's giving free tickets out to people to Bitcoin Nashville who will be babysitters so that parents can have time to do what they want and the kids will come and be in a different environment than where they normally are. So pretty cool option for anyone out there looking for a free ticket to Nashville. I don't know if David Bailey's still doing it, but just tell him I told him he should still do it.
Yeah.
Thank goodness for the bright orange future in a time when it could otherwise be rather dark.
Yeah,
that's right.
Yeah. All right. And it looks like the dog behind me is saying, all right, gentlemen, it's time to
get to the beach, Marty.
I wish I could. I've got another podcast, a few more calls today, but I'm going to enjoy the good weather, the good vibes, the good company.
Well, you can take a boat out now.
Yeah. Maybe next week I'll get one of those floating tiki bars. I'll record from there. Get some Wi-Fi.
That'll be the day. I love that.
All right. Interest in debt expense is going up. The Nvidia's pumping. People are still sleeping on Bitcoin. If you're here listening, you have an edge.
You're still early. Gosh.
I mean, Michael's throwing out 450K 2025 price prediction. So if that's the case,
I was just quoting Mark.
Mike, put that off. Whoa.
No, I don't. I joke about $1 million, whatever the number is. They're just, I think they're mental models for people to understand that this thing, it can go anywhere. We don't know.
Yeah.
When you don't have token splits, that's what happens to price, folks.
Yeah. It's a beautiful thing. It's only
Thanks
21
for joining
million.
us, Mark.
Thanks, everybody. Thanks for organizing.
See you guys next week.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that Onramp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.